Hi folks, Rick Waddell here. I'm the Chief Investment Officer at RFG Advisory in Birmingham. Today is Monday, March 23rd, and I figured I'd give everybody a brief market update. As I speak right now, the S&P 500 is down about 4.5%, down to about 2,200 as a price level, so slightly below that 23 to 2,500 range that we've been talking about for the past couple of days. And right now, all eyes are focused on the federal government. Obviously, the coronavirus data over the weekend continues to be, I would say, somewhat grim. And it likely will continue to be somewhat grim over the next couple of days as we continue to see an increased amount of testing, which leads to an increase in the number of confirmed cases. I don't expect that to really go away at any point in the future. It's not really a question of how many people have the virus. It's more of a question of how many people that we know that have the virus. In any event, eyes on the federal government. The Fed this morning announced several new programs designed to inject liquidity into credit markets. Those include buying an unlimited amount of Treasury and potentially mortgage-backed securities, establishments of new facilities to support both corporate credit markets, be they primary or secondary, so in other words, new issue corporate credit and existing corporate credit programs. The reestablishment of the TALF from back in the corporate crisis days, or the crisis of '09 days, which is designed to support asset-backed securities, and a series designed to support money markets. And this is continuing to inject liquidity into the credit markets to make sure that they function properly. That's all well and good. However, I think what the market, at least the equity markets, have been reacting to recently, whenever the Fed steps in to provide additional liquidity, it's almost seen as a negative in the sense that, wow, things must really be this bad for the Fed to be stepping in to inject this much liquidity. And certainly the economic data that we're going to get over the course of the next week or two is probably going to look pretty horrendous. I mean, if you shut everyone in the United States, or close to a third of them, inside their homes, it pretty much shuts down economic activity. And in fact, the data that we've seen, or the suggestions that we've seen from Goldman Sachs and a couple of the other banks in terms of Q2 GDP would suggest that we could be off as much as 24 to 30% on a short-term basis before coming out and rebounding on the other side. So I don't expect that data to get much better. What the market really needs to see is some type of response from a federal perspective, some sort of federal stimulus package, which Congress went toe-to-toe with over the course of the weekend, failed to come to an agreement. I think that there's a little bit of negative market sentiment right now in terms of a little bit of frustration with the inability of both sides to come together for a fiscal stimulus package. The good news on that front is I don't think any politician in their right mind wants to be the person that said that they couldn't agree with the other side and so Congress did nothing. I don't think that that would be a very popular political message to carry into the November elections. I'm pretty sure that both sides agree that there is a need to do something. It's just a question of how to go about it. So I'm at least cautiously optimistic that we will see some type of fiscal response to the crisis. With that said, I think it's also important to note that there is an emerging dialogue over the weekend in the White House around the trade-off between our response to the virus from a medical standpoint and our response to the virus from an economic standpoint. So there continues to be, I think, a little bit, or at least more of a developing dialogue between at what point do you decide that there needs to be some focus on the economic cost of all the efforts that we're doing, all the efforts that we're making to contain the virus, which will be interesting to see how that plays out over the course of the next 15 days or so. It's curious to see how the White House will come out and suggest in terms of people going back to work or people starting to return to a little bit more normalcy in their lives. Even if that means accepting a little bit more of a rapid spread of the virus, it'll be interesting to see how that plays out, because there certainly is a cost in terms of human terms of the economic damage that's going on in the economy. With that, if you have any questions at all about the markets or trading strategies or anything else like that, please feel free to reach out to either myself or your advisors. I hope you have a great day, and I look forward to speaking with you again soon.